Hey everybody, Charlie and Will back here in the JCO studios. As you can see, topic right now is the Trump shimmy, I guess, right? When you see all the football players, that's their new like touchdown dance. A lot of these guys are like they're like getting a sack and they're doing the little Trump, shit. But Trump won, massive shift in economic governing philosophy. Though, I'm just going to talk about the general effects of what we think 2025 and beyond is going to bring.
Yeah. So kind of what Charlie was saying with Trump, we're going to get that pro business, pro America, agenda, and
Yeah,
so
right.
we're immediately seeing the effects of that and that outlook with the stock market and really every asset class going up in value. I mean, just a
Right.
huge injection of money into the markets, which kind of signifies that all that money was sitting on the sidelines wanting this. If it was a different outcome, then that money might be elsewhere. Maybe it would have gone into different types of investments, different types of stocks, whatever. But, you know, it definitely tells us that the money was sitting on the sidelines waiting for something and is now being injected on a pretty large scale, actually the largest ever.
Yeah,
Um,
exactly,
and
exactly.
so,
And
and that's straight up because of the pro business, pro America first
right.
agenda that we're about to have.
And that's what history has shown that's what's happened after in the 70s when, after the 70s and then when into the 80s when Reagan took over. Again, pro growth. It happened in the 60s with JFK, same thing. After the dot-com bubble in 2000, dot-com bust in 2001, again, okay, cut taxes, we're going to back off on the regulations. And then in 2016, actually 2017, with the first Trump tax cuts, again, a lot of, and it's not just like economic growth for its sake, which we've seen GDP go up the last few years. It's more people keeping more money in their pockets,
Yeah,
right? It's not the last few years GDP has gone up because of inflation, because of increased prices. So naturally it's going up. Now we're talking about
because of government spending.
right. We're talking about government receipts, government taking in the same amount of money, but GDP going up. So that gap, that's all staying in the pockets of consumers, which is good for our business, for good for our realtor friends, good for our clients wanting to buy houses. So the immediate outlook for 2025 is very pro growth, right? So, and I think that one of the things that we're hearing, it's great for pro growth, but it's also sometimes economic boom leads to inflation going up, which is the driver of mortgage rates. So that's one thing that we're trying to be realistic with everybody about is the fact that that's what some economists say is that inflation could tick back up, which I don't know. What's your gut telling you on that, Will?
I mean, I think the inflation will, for the foreseeable future, be stuck, between 2 and 3. I mean, it they say that they want to get to 2%, but I have a feeling that they're gonna want to keep it at 2.5 to 3% because of how much debt is owed, inflation induced debt destruction. And
Right,
basically if inflation is higher, that means that your debt is worth less. So
right,
I think
right.
that I think inflation will always be around 2.5 to 3%. But I mean,
Yeah, yeah,
there's a difference between inflation where the government is giving a ton of people money
yeah.
to try to sustain the current level of economy.
Hmm.
There's a difference between that and a pro growth, pro America. Everybody's, more people are getting new jobs, actual new jobs, beneficial, productive new jobs.
Right,
People
right,
are getting raises because the companies are doing well, because the companies are paying less in taxes. So they're putting part of those savings back into the pockets of their employees.
right,
That
right,
that's the good kind of inflation, and that's the
right.
inflation that we want, or that's the type of inflation result,
That we
if
get. That's
yeah,
the inflation we
exactly.
get
So,
in these times. Exactly
yeah,
right. And also too, if you really look back, the other factor is so basically what we're saying is our immediate prediction in terms of the housing industry and of course mortgages on our side is we think that maybe mortgage rates may come down a little bit more, but honestly expect them to hold. Don't expect if anyone's predicting for rates to drop, I would point them back to the last 2 years of people predicting mortgage rates to drop. So
yeah,
because economic conditions show that we're ready to boom And usually during a boom cycle, rates either hold or go up a little bit. And I think that we're coming down off of that. Same thing, inflation, we're coming down off of super high inflation. So I don't see how inflation is going to get kick started again. I mean, everything is $7 for a dozen eggs is
Dozen eggs.
so
Yeah.
I think we're good on the cost of stuff going up. I think it's going to kind of normalize. And so having said that, anyone who's on the sidelines waiting, thinking rates are going to come back down, now's the time to kind of stop with that hope, and
Yeah.
just go ahead and buy your house, right?
Yeah. I mean, I think that's the plan, right? I mean, I'm going to share this. This is just for Houston, but this is the Texas A&M group. They do a great job of
Oh yeah, the real estate
year over
research
year. Yeah.
facility.
Yep.
Yeah.
Exactly. So this is just for Houston, but if you look at, this is every quarter. So year over year change percentage wise, I mean, you're at the upper twos, 3%, down
Mhm.
into the ones a little bit in 2023. But these have been some of the worst times, not worst, but, the
It's been a
fewest amount
very
of
stagnant
transactions.
market.
Yeah,
Yeah.
exactly. So
Yeah.
even in these types of markets, you're still seeing, 2, 3, 3.5% growth and appreciation
Yep.
in the home price. And so
Correct.
waiting another year,
Yep.
you're paying 310 for that $300,000 house.
Right.
So,
Right.
it's
Yeah.
just,
And that extra $10,000 translates to like 70, $75 per month on the monthly payment,
yeah,
higher.
yeah,
So that
yeah,
also, and a quarter point lower rate is $50 a month on a $300,000 house. So the savings are not there, right? If rates tank like by a point, yeah, now you're talking about $200 a month of savings, but we're not predicting that. It just doesn't. It's not really in the cards when you talk about the relationship between high growth, booming economy and its relation to inflation, and then inflation's correlation with how it trades with a 10-year treasury yield and mortgage rates in general. So that's what we're saying is we don't think it's going to get a ton better. It might
yeah,
get a little better, but it may not get a ton better. But again, like you said, get a good value on the house, right? Because there's houses that need to be sold and you're going to see appreciation. Houston definitely. San Antonio's been a little bit flat the last like 6 to 9 months, but that just is all the more reason for it to accelerate again.
yeah,
So another good point too, I did some research on consumer confidence levels, and every time, like for the first few years after a tax cut or some sort of a easing of regulatory environments, consumer confidence goes way up because we saw it in the 80s, we saw it in the early 2000s, we saw it right after in 2017 after the Trump tax cuts, and so I think going into this, if you're thinking about buying, if you think about selling your house and buying, right? And or for our realtor friends that are listening, like consumer confidence is about to go way up. And when people are confident in the economy, they're more willing
yeah,
to buy stuff, right? Um, they're they know where their paycheck's coming from,
yeah.
So that's another thing that's going to get ramped up because I don't know if tax cuts are coming, but the current tax rates that we had enacted in 2017 are expiring next year.
Correct.
So with Trump back in and the Republican controlled House and Senate, expect those to get extended at
Yep.
the very least, right?
At the very least. Yeah.
But all the other things he's wanting to do, no tax on tips, and I mean, he's really kind of throwing everything out there, right? So
Yeah.
a shock to the system, which could be good. So, and then Will, you had some interesting takes on the tariff issue because I know a lot of people are kind of concerned about tariffs and all that stuff. So,
Yeah. And what it might do
well,
to inflation and cost of goods and everything here locally. Well,
exactly.
the whole point of tariffs, one, it's a negotiating tactic, and two, it's a pro America, pro domestic manufacturing agenda. And so,
Yeah.
the goal is to be able to bring things more locally to the US in terms of manufacturing,
Right.
that, if they're a little bit more expensive, then, that's okay because they're made here in America. There is a report that says the the recent tariffs that were enacted last time with Trump that have been extended through the Biden administration cost the American family an extra $300 a year.
Yeah.
Now, $300 a year for, making other countries pay their tariff to us when we have to pay their tariff to them.
Right. Right.
It's a good thing for the country,
Here we
so
are.
it does bring things here locally, and that provides, hundreds or thousands of great paying jobs.
Right.
So, the tariffs, there are a bunch of different tariffs that are still in place, but one, just to point out, there was a tariff put on aluminum from Canada and Mexico that
Mhm.
Trump put in, and it was 2 or 3 weeks before that those tariffs were removed because they came to the table and said, "Okay, fine. We'll do what we have to do. We'll do the right thing."
Right.
So,
So
again,
you're
it's a
saying Trump's
negotiating
playing
tactic.
chess.
Yes, exactly.
Right.
So it's not
Right.
something to worry about. It's not something to think that, okay, this is going to cost us an extra $10,000 a year or whatever in charges or average day-to-day fees or whatever.
Right. Right.
It's not a big deal. So
Right.
remember, a lot of these things have to be said publicly and maybe have to be enacted and put into place just to get the other side to the table to come up
Mhm.
with a fair deal for everybody. So
Nice. Yeah, exactly. So, yeah, and then of course, I guess the final thing too, you also had an interesting take on uh Doge, Doge, the
yeah,
Department of
so
Government Efficiency. So Elon's excited about twittering the government, right? So
and this may be
yeah,
something to kind of counterbalance inflation. There
right.
are almost 24 million people that work for the government, whether it's federal, state, or local governments.
Uh-huh.
24 million people. That's like 6.7% of our entire
Like
population,
working population. Yeah.
which is incredible. That's the entire population, not even
Wow.
working
Yeah, yeah,
population.
yeah.
So, I mean, that's an incredible number.
Right.
I didn't think it was anything close to that. And
That is
so
a
this
lot.
whole Department of Government Efficiency, it depends on how much Elon slash the administration
Yeah,
wants to slash, repetitive jobs because you got to know that there are, 5 jobs that could be completed by 3 people or 4
exactly.
people. So
Right. Or
if
the federal
if
government's doing something that is actually handled by the state and local level also.
exactly,
It's
yeah,
like, why do we have all these entities doing the same thing? Right, right. So, and of course, he's going to be going after all the government, like the federal government stuff, like state and local. You're going to be fine. They're going to have to figure out ways to adjust, right? But yeah, that'll be interesting too. And I think that's a good point, like the hedge against inflation, right? Yeah, yeah. So the lowering, hopefully, of the government
yeah,
spending to even back out with the revenues. You're right.
yeah,
So
and
because they
and
don't have
that
a revenue problem, they're bringing in a lot of money.
yeah, and but getting rid of 10% of government employment that doesn't need to be there.
Right.
Those are 10% that hopefully the private sector could absorb,
Yep.
for maybe better paying jobs,
Right.
but
Right.
also lower the amount of, liabilities that the government has. And that maybe counters more tax breaks or more, incentives for people. So,
Hmm.
or maybe gets us to where we don't have a deficit every year.
Exactly. Right. Right. And of course, yeah,
So,
the good thing that the main the word you used there was incentive, which
yeah.
I like, right? Because like we incentivize our kids, so every kid wants that popsicle at the end of the baseball game.
Hmm.
Like, how are we any different, right?
Yeah.
We're old, we're
It's
grown
just
up,
it's a different popsicle.
different pot type of exactly. So we still want that popsicle. Everybody wants incentives. So,
Yeah.
but yeah, yeah, create the incentive. So I guess really in summation, we do think that it's already shown, like you said it's already showing that growth is going to happen. It's already happening. So expect the economy to boom again. Tax rates staying the same, hopefully going down though. So hopefully again, more money in consumers' pockets. Don't We're going to say it again. We've been pretty darn good on our predictions. Dude, you hit the Fed rate cycle on the nail. I went back and I looked. Your
Hmm.
prediction at the beginning of the year, you actually said September. And I
Yeah.
kind of talked you out of thinking that, but you said they were going to slash, which they did. A half a point
Half
cut
point. Yeah.
on the first cut, and then they cut again last week. half point cut is a slash. That's
Yeah.
aggressive. So you
Well, it's
hit that
only happened like 3 or 4 times, and every
right,
time it's been right before a
a
major
massive
recession or
recession. So
yeah, yeah,
yeah.
exactly.
So
So
you called that. I've been pretty good on the rate predictions. So when we say that we think that rates are probably going to, they might come down a little bit, but more than likely they'll hold. But the days are like 3%, in the 4% are over. So don't hope for that. Let's, let's do hope for that. Don't expect it, right?
yeah,
Don't expect it. If you've been sitting on the fence or if you have outgrown your home and you have to sell, you really have to, and you're hoping that it would come back down, you got to get rid of that 3% rate. It does stink, but don't wait around any longer, So we think that rates are gonna, I think they'll hold at worst. I don't think they're gonna spike because we're gonna have, like you said, if there is some inflation, it's going to be holding as well. And then we don't know what's going to happen with all these media shakeups, but at the end of the day, we've seen that Trump plays chess when everyone else plays checkers when negotiating these kind of things,
yeah,
economics, trade relations, stuff like that. He's a master. So,
yeah.
but yeah, just that's what we are kind of estimates for next year and moving forward are at, and hope for the best.
Yep, absolutely.
Heck yeah. So go to jcharleslending.com, go to shopthatrate.com. So if you want to just get a real quick quote estimate, shopthatrate.com, send your clients there. We'll reach back out, get them an idea of what they can expect. No obligation, no pressure. Literally, we'll just email you
Takes
an
30
estimate.
seconds.
Yep.
Yeah.
Get it done. Get it
Yep.
done. So, all right, guys. Thanks a lot. Talk to you all next time.